Hello everyone! Today we're diving deep into the Greater Vancouver real estate market update for February 2026. The numbers are presenting a fascinating paradox. Sales are down, listings are down, and prices are still sliding year over year. Yet somehow, whispers of stabilization and even pockets of optimism are emerging. Whether you're actively buying, selling, or just trying to make sense of this intricate market, stick with me. We're going to unpack every crucial detail and give you a clear roadmap of what's really happening and what you can expect as we head into the pivotal spring market. Let's start with the overall market activity. In February 2026, Metro Vancouver recorded 1,648 total residential sales, a notable 9.8 to 10% drop year over year, and nearly 29% below the 10-year seasonal average. This marks the third slowest February in 25 years, following a 2025 that saw record low sales volumes. Chief economist Andrew Lee calls this the new normal, indicating this sustained period of lower than average sales volumes appears to be holding steady. Meanwhile, new listings also fell to 4,734, down 6.4 to 9% year over year, although last February was a comparatively busy listing month. Despite fewer new listings, active inventory remains high at 13,500 to 13,700 properties, up 6% year over year and a significant 37% above the 10-year average, marking a 12-year high for February. This imbalance of fewer buyers and abundant supply continues to exert pressure on prices. To gauge the market's temperature, we look at the sales to active listing ratio, which currently sits at 12.5 to 12.6% for all property types combined. This is just barely within balanced market territory, historically defined as 12 to 20%. Breaking it down, detached homes are clearly in a buyer's market that's 6 to 9%, indicating buyers have significant negotiation power. Townhomes 16.6 to 17%, and apartments 14 to 14.1% are balanced, leaning slightly towards a seller's advantage. Interestingly, January briefly saw a 9% buyer's market, but it only lasted 1 month, showing how fleeting such conditions can be in Vancouver. Now, let's talk prices, the aspect that touches everyone. The composite benchmark price for all residential properties in Metro Vancouver is $1,300, down 6.8% from February 2025. Crucially, prices were almost flat month over month, decreasing by a minuscule 0.1% from January 2026. This flatlining is an early sign of potential stabilization after 11 consecutive months of decline, the second longest price correction in 20 years. This brings overall prices back to September 2021 levels. By property type, detached homes are at $1,835,900, down 8.8% year over year and another 0.8% month over month. They are 10 to 12% below their peak, roughly at 2021 and 2022 prices, and remain a buyer's market. Apartments benchmark at $782,000, down 6.8% year over year, but actually up 0.5% month over month. Townhomes are at $1,461,000, down 5.6% year over year and up 0.3% month over month. This month-over-month uptick in attached and apartment segments suggests the earliest signs of stabilization, while detached continues to face considerable pressure. Long-term, many condo owners who bought at peak periods might find themselves at a loss or just breaking even after accounting for taxes and commissions. Regionally, Metro Vancouver isn't a single market. Squamish and Whistler continue to be outliers, with detached home benchmarks up significantly 11.1 to 12.3% year over year. Conversely, Vancouver Westside luxury properties saw a substantial 13.7% year over year drop, and New Westminster apartments were down 10.6%. For buyers, Surrey and South Delta offer more affordable options and show some stabilization, while most core areas generally saw 5 to 10% declines. Broader economic forces also weigh on the market. Ongoing global uncertainties, local land claims, AI, and job insecurity are contributing to market stagnation. We are also in the largest mortgage renewal year in history, with 1.2 to 1.5 million mortgages set to renew. This pressure is reflected in British Columbia's mortgage arrears, which hit a 9.5-year high. Foreclosures are also up 8% month over month, nearly doubling since October 2024 to 465 total. Even developers are struggling, as evidenced by the foreclosure of Everest Group's 24-story Central project in Surrey, resulting in 167 fewer homes for the market. On a brighter note, the Canadian government is pushing housing affordability measures. Bill C-4, Making Life More Affordable for Canadians Act, recently passed its third reading in the Senate. If finalized, eligible first-time home buyers could recover up to $50,000 in GST rebates on new homes priced up to $1 million, with a tapering rebate up to $1.5 million. This tax relief aims to stimulate the demand side and make new homes more accessible. The critical question remains, what will the spring market bring? GBL's Andrew Lee calls it the litmus test. For buyers, conditions are quite favorable: high inventory, motivated sellers, prices below peak, and slightly cheaper borrowing. Spring 2026 offers a stark contrast to previous years. For sellers, fewer new listings came to market in February than last year. If this trend persists and spring demand picks up, inventory could tighten, potentially putting a floor under prices. This could reverse the modest declines, especially for attached and apartment segments already showing stabilization. However, detached homes, particularly high-end ones, still face significant pressure due to high supply, low demand, and affordability issues. We are seeing properties priced correctly receiving multiple offers, indicating selective demand. The Bank of Canada holds the interest rates in March, with no immediate changes for variable rates, though future rate reductions are being discussed amidst economic indicators. In summary, Greater Vancouver's real estate in February 2026 presented a complex picture, defined by a new normal of low sales and high inventory, which reached a 12-year high. While overall prices were down year over year and back to 2021 levels, townhomes and apartments are hinting at month over month stabilization. Detached homes, however, remain a clear buyer's market. Economic uncertainties, rising mortgage arrears, and foreclosures are real pressures, yet potential government tax relief for new home buyers offers a positive counterpoint. The spring market will be critical, testing whether demand can absorb the high inventory and if the current stabilization signals lead to a broader recovery, particularly for correctly priced properties. If you're in Greater Vancouver and thinking about making a move, whether that's selling your current property or finding your next home in this dynamic market, don't navigate it alone. Understanding the nuances and having the latest data on your side is crucial. Please don't hesitate to reach out. Call or text me for a personalized strategy tailored to your specific needs and goals. I'm here to help you make informed decisions. Thanks for watching, and I look forward to hearing from you.